In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach.
Hey, what's going up, BULLRUNNERS? Welcome back to the channel. Ryan Huggins here. What if I told you guys that the crypto market is on fire right now with massive wins and game-changing moves happening today? From XRP's legal breakthrough to Ethereum hitting new all-time highs, there's huge news that you need to know about. Plus, we'll be heading over to X to find out all the breaking news that's happening in the crypto world today. We'll head over to Forex Factory, check out all the red folder news that happened this week, but what you need to know about for next week. We're going to head over to Crypto Quant and check on retail activity. And at the end of the video, we're going to be jumping into the XRP charts. We're going to be looking at that resistance level that's in front of us right now, also support levels to the downside, and we will be looking at our long-term and short-term momentum waves, and so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day in the crypto news like we do for you every day on this channel, make sure you subscribe right now. And if you are still feeling bullish about this current bull run, let me know by commenting 777 down below. $4.04 trillion, up 5% on total market cap just today alone. And that comes on the back of $246 billion worth of trading volume today. Fear and Greed Index also taking a spike to the upside as we see here at 56, still in the neutral zone. Yesterday was all the way down at 46. Altcoin season inching closer to that 50 out of 100 mark when we could consider it the beginning of altcoin season. If you take a look at the graph down here, we haven't been above the 50 level all the way back since July 20th. Bitcoin dominance dropping under 58% for the first time in months. As we can see here, 57.7%. Bitcoin ETFs, another down day for the day, $194 million worth of outflows. When we take a look at the week, we have a total of $1.155 billion worth of outflows for the Bitcoin ETFs. Ethereum ETFs doing much better on the day, up $287 million. But for the week, they are still hurting, down $571 million total after the largest inflows ever to Ethereum, which was last week, $2.8 billion. Top 6 cryptos by total market cap. Number 1, Bitcoin to $116,905. Number 2, Ethereum at $48.12. Number 3, XRP at $3.04. Number 4, Tether at $1. BNB number 5 at $891. And Solana at number 6 at $199. Heading over to Forex Factory. Unfortunately, this week was bad news for the total markets. However, today, Jerome Powell changed it all and fixed it all for us. He came out and spoke at the Jackson Hole Symposium, and it is confirmed. It is official. We will be getting a rate cut, potentially. He has hinted at it heavily that September is going to be seeing a rate cut, as you saw in the intro of the video. What is crazy is how indecisive and ambiguous he is at saying the things that he says. And what we're looking for next week, though, preliminary GDP numbers is going to come out. And then every single week, these unemployment claims are extremely important. And also next Friday, we're going to have the core personal consumption expenditures, which is the Federal Reserve's primary inflation measurement. So it's going to be a big number coming out for us next week. But speaking of big news today, like we were talking about, the Federal Reserve Chair Jerome Powell carefully opened the door to an interest rate cut in September, pointing to rising risks for the labor market, even as worries over inflation remain, as we heard in the very intro of the video. And this was the meme that was going around today that was absolutely perfect. Powell in downtown Jackson Hole, 1 hour after his speech, looking swole as can be. He got his big pump on during his workout, and he pumped the markets heavily. Also, big news in the markets today. The summer of all-time highs continues with another atmosphere breach, this time from Ethereum. That's right. It is official. Ethereum hit a new all-time high today, and this came on an absolutely explosive candle to the upside for Ethereum. So when you zoom out and you take a look at the weekly candles, let's go ahead and draw our horizontal line from the previous peak. We can see that it got right there and just barely poked right through it. So technically an all-time high, but we are seeing a slight pullback in today's new candle. These are monthly candles. I will tell you something that is rather exciting when we take a look at this monthly chart here. The short-term and middle-term momentum waves had reset short-term to zero, and it is starting to make its climb. Now the mid-term momentum wave is climbing. Long-term momentum's actually been bullish. As fact, if we look at the monthly charts here, we went into this bearish section here. Now, obviously, that was too late as far as catching the short. Then it flipped from the red bearish signal to bullish green here on November 1st, 2023, and it did take and definitely rip to the upside. Then we see the short-term momentum had a reset, but now it's finally powering through to the upside, and there's tons of room to run to the upside on these monthly candles. There's 9 days left in this monthly candle. So what we're looking for actually is going to be very important, that we do close as a new bodied high candle record for the monthly, and we would see that being at 46.34. If we can break and close above 46.34 and then see a continuation monthly candle, momentum wise, it looks really possible for Ethereum to do that. But that's very exciting. Another new all-time highs. Obviously, this makes crypto hitting the headlines again because there were so many people talking trash about Ethereum's a dead coin. It's never going to do anything. And now we are officially here. Now, it did take an extra long time compared to everything else, but it has done it. And there's a big breaking news today for XRP as well. Grayscale has now filed their S1 for XRP ETF as filed with the Securities and Exchange Commission on August 22nd, 2025. Form S1 registration statement under the Securities Act of 1933, Grayscale XRP Trust. And the reason this is so important is a spot XRP ETF could bring billions in institutional money to XRP. As I showed you in the beginning of the video, with Ethereum having their largest ever inflows last week, could you imagine having over $2 billion worth of inflows to XRP spot purchases in 1 week, guys? This is absolutely insane. And it is now going to be possible once these ETFs do get approved. After the SEC lost its Ripple case, the path has become clearer for crypto ETFs. And if approved, this could make XRP more accessible to traditional investors, which would boost its adoption. So are you ready for XRP to moon? Drop your price predictions down below. But that's not even the biggest news for XRP today, and that was very positive news, but this is the biggest, most epic news that you could ever have happen for XRP, and that is correct. SEC versus Ripple. The Second Circuit has approved the joint stipulation of dismissal. Ladies and gentlemen, it is literally official again. So as you remember, everyone kept on saying, oh, it's not official until the courts sign off on it. Well, now the courts have officially signed off on it. So this literally officially ends the 5-year legal battle. Back in 2020, the SEC sued Ripple, claiming that XRP was an unregistered security. And in 2023, Annalisa Torres ruled that XRP isn't a security in the secondary market sales, but institutional sales broke securities laws, leading to a $125 million fine for Ripple. Now, both sides appealed. SEC and Ripple appealed, but on August 7th, 2025, they agreed to drop all appeals, leaving the ruling intact. Each party covers their own costs, and XRP's price jumped nearly 10% to around $3.10 after the news. And the reason that this is important, besides the obvious, is this is a massive win for Ripple and the crypto industry as a whole. So obviously we talk about Ripple winning the case, but for crypto as a whole, the ruling clarifies that XRP isn't a security in the secondary markets. So this is really big because if XRP is sold on Coinbase or an exchange of any kind, it is totally legal, giving investors and exchanges more confidence. So it could also set up a precedent for other crypto cases, reducing regulatory uncertainty. Plus, with the legal cloud lifted, Ripple can focus on expanding XRP's use in the global payment system, which could drive the prices even higher. And XRP is already showing bullish momentum. But will it break its all-time highs again soon? Only time will tell.
Have you built a crypto portfolio over $1 million but want to access your wealth without selling any of your coins? Well, imagine unlocking up to 85% of your portfolio's value to fund ventures like real estate, to buy other projects in the crypto space that are undervalued compared to the projects that you currently hold, or to diversify into different DeFi yield opportunities. That way you can live on the interest without selling any of your crypto. Well, we've partnered with a leading global office offering non-recourse crypto loans for investors with portfolios starting at $1 million. The same company that is trusted by the world's largest institutions and investors because, as you already know, the billionaires don't sell their crypto, they borrow against it. So if you're ready to unlock up to 85% of your portfolio's value without selling any of your coins and you have a portfolio with at least $1 million, then email us at team@bullrunners.com. You're going to see our email contact in the description below, and we'll get you connected with the company that has helped clients like ours north of $100 million borrow against their crypto without selling any of it. So reach out to start a conversation with our team right now at team@bullrunners.com, and we'll talk to you soon.
Everybody wants to know, is the bull run still going on? Is it coming to an end? Well, let's take a look at a really nice indicator that could help us understand what's going on. And this is called the spot retail activity through trading frequency surge. So a big long name for this indicator. And what does this indicator do? This indicator measures the activity level of retail investors in Bitcoin based on their trading frequency. The number of traders can reflect the level of market participation by retail investors. Considering the growth in the number of exchange users, the indicator is evaluated as relative value rather than an absolute number. So based on the change from a one-year moving average, it helps assess whether retail investors are entering the market. So as we take a look at the chart here, the gray color is neutral. So there's no one way or the other. It's not extremely heavy on retail. It's not extremely light on retail. When it goes green, this is when there's too few of retail. There's not enough retail buyers. Essentially, it's just institutional buyers at this point. When it's pink, it means that there's many retail. There's a lot. It's basically a mix of retail and institutional. And then when we go red, then we finally reach there's too many retail traders involved. And what do institutions do when they know there's too many retail traders involved? Well, typically they dump on your head. And as we can see historically, when it got to too heavy of retail traders, market sold off. Too heavy of retail traders, market sold off. Even here, too heavy of retail traders, the market did do that consolidation down before the explosion to the upside. As of right now, where we're currently trading in the markets, as of August 21st, 2025, we are sitting in the neutral. Price is at 112,000 at the time of this report yesterday. So if we look at this report and we're trying to figure out, okay, have we reached a top? Well, the great news is there is not the red dots everywhere indicating too many retail yet. We are sitting in the neutral zone. So we do have continuation available to the upside. All right, so let's jump into the charts for XRP. And as we talked about yesterday when price was down into our supply and demand zone, we talked about needing to break back above the 10 exponential moving average, which is our orange one here. So on the daily charts, we have the 10 exponential moving average, the yellow is the 30, and the red is the 50. Now, obviously, we needed to break through the 50 and the 30 to get there. But what we want to see is to maintain momentum above the 10 exponential moving average, which at this point we are doing. We did also talk about the supply and demand zone that once we get to this level, we were going to experience some resistance. That was at $3.09 on the low side, $3.14 to the upside. So what we need to see now is we do need to see momentum continuation to the upside, breaking above $3.14, and then we'll run into more resistance again at this 327 to 330 level. Remember that $3.30 level was the level that just could not be broken. It went once, twice, 3, 4, 5, 6, 7, 8 times before breaking to the downside. But $3.30 just could not be broken significantly with a bodied close. The other thing we're keeping a very close eye on is our long-term bullish momentum indicator did flip bearish. So this candle is a possibility that it's an anomaly because of the fact Jerome Powell came and said that September we might be seeing some interest rates. So obviously the entire market spiked, but it did run into an extreme resistance level here. Now we do have some good indication here as we talked about yesterday as well. Our short-term and middle-term momentum waves on the daily charts had reset to 0, and we can start to see our short-term momentum is making a kick to the upside. But we need to see continuation. Otherwise, it could fail, and then it just comes right back down to the downside. As we take a look at our 12-hour chart, we can see that long-term and middle-term momentum have really started to take a ramp to the upside. We take a look at our long-term momentum wave. Unfortunately, it's still in the bearish zone. So we'll continue to watch this for the next 24 to 48 hours to see if we can break full bull on the 12-hour charts back to the upside. We can see last time the same scenario played out. Short-term, mid-term momentums had gotten down to zero. We had a dip below the zero line on our Wolfpack indicator. This was all pointing to bearish scenarios, and sure enough, it came and dipped right off of our supply and demand zone. But then we had a big rip to the upside momentum-wise. It took 4 days and a pullback before finally making the push and breaking out back above the zero line for the bullish momentum wave. If we take a look at this exact scenario that happened, price pushed up, came back and retested, and then took off to the upside. Right now, price has pushed up. It's running into the same rejection area. You can see the candle's actually exact same spot where it rejected. Right now, we're rejecting at the moment. Now, the weekend is kicking off. We would love to see a weekend bullish push to the upside. But as you know, the weekends have been kind of lame as of recently. Looking at our 4-hour charts here, we can see that we did break down below, got bearish here back on August 14th. And that's when we started having this big decline to the downside. We had been in the 4-hour bearish momentum long-term for that whole time. We did just officially break back above the zero line on the 4 hours. Now, the one thing I don't like is it does have a red arrow right here indicating that we're losing some momentum. So it could be a little pump and then a reflash down to the downside like we saw here on that same scenario that we were talking about in the larger time frame. It pumped up, came back down, retested, and then finally took off to the upside. So we'll keep a very close eye on that. The other thing to look at is let's go ahead and take a look at our XRP weekly spider lines charts to see how that is doing. So when we take a look here on the daily charts, we can see price did dip below our spider line right here, which is our $2.89 spider line. Consolidated here for a couple of days, pushed back above our $3.03 spider line, which is currently acting as a support. So we would prefer this not to break to the downside, consolidate here, and then make the next level up. Our next level up is going to be that $3.13 spider line here. After that, it'll get to $3.25. Then we can push up into the 344 and then ultimately back to the arch nemesis, the red dotted line we have not been able to break. In fact, that was our previous all-time high, the $3.40 level, before having its massive pullback at that time, coming back down all the way into the $1.60 range. Then it finally made the push back up right into that red dotted line again, had several wicks above it, but no bodied candle closed above that level, rejected back to the downside. The good news is typically when we break a zone like this one here, this $2.90, which we broke this one, had a secondary continuation candle here, we could typically see an entire loss of level back down to this spider line levels down here. But good news is our traditional supply and demand zones did come into play. As you all know, the way we do these supply and demand zones are based off of using the Heikinashi candles on the 4-hour time frame. And what you'll do is you'll go to the pump and then you find the pullback, the last red candle before the next pump, pullback, last red candle before the pump. And that's where we've got these supply and demand zones. As you can see, they've been spot on the whole entire time. Unfortunately, we ran into one as well as a resistance to the upside. We are still green candled up, so we are still bullish on the 4-hour Heikinashi. We are starting to make that move to the upside, but we do need to break this zone. We have to break $3.14 to see continuation up. When we drop down to an even smaller time frame, just to kind of get an idea of what might be happening right now, on the 1-hour charts, we have broken above the zero line. We are bullish. However, it's doing a pretty gnarly hook right back down. Our short-term momentum's coming back down as well. We do have also a support line of our 1100 exponential moving average on the 1 hour sitting right here. The good news is, though, we do have a brand new 3-day candle that just kicked off. And if we take a look at support levels, the 3-day candle came down and wicked exactly off the 30 exponential moving average. So that giving us a really good support there on the 30 exponential moving average. We do have a 3-day body candle just getting opened. Unfortunately, it's opening to the downside at the moment. But one thing to keep in mind is if we take a look at the fair value gap here, there's very much a possibility it comes back down, fills this fair value gap, and then just makes a run to the upside. That would also coincide with bouncing off the 50 exponential moving average. That does not have to happen, but it's definitely a possibility. As we see to the upside, we have a fair value gap getting us back to 320, and we have a fair value gap right here that was not fully mitigated that also gets us right back into our supply and demand zone. So we'll continue tracking this every day. So make sure you subscribe. If you're getting value out of this video, make sure you smash that thumbs up. Let's take a look at Bitcoin. Bitcoin also experiencing the same scenario here on the daily chart, having a dip below the zero line, but potentially ripping right back to the upside. And we talked about this yesterday because this happened before with Bitcoin. It came down and then made a rip to the upside. This came down, made the rip, even though it did come back and retest before taking off to the upside.
Hey, bull runners, check this out. If you want to learn how to find the next 10x, 50x, or even 100x altcoin in this video, listen to this. Our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1 and is currently still up over 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. And the bull run is just getting started. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers.